Meta Platforms is scheduled to report quarterly financial results on January 29th, 2025. That has investors asking if they should buy this stock before the company reports earnings. The reason investors are concerned about that moment is because earnings releases tend to create extreme volatility in the stock price. Prices sometimes go up by 30 or 40% and also fall by 30, 40, 50%. It can be a huge event for a business. And so investors want to know how to navigate that moment. I'll share some details with you in this video and answer that question. Let's get into it.
I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now.
So in its latest quarter, Meta Platforms reported revenue growth of 19%, up to $40.589 billion. Meta Platforms, digital advertising, it's the second biggest company in this regard, right behind Alphabet. And the forecasts for 2025 suggest that digital ad revenue could grow the industry by another 10%. Overall, the advertising market is approaching and exceeding $1 trillion worldwide. It's a massive market opportunity that Meta Platforms has a strong, firm grasp on. More impressively, the company's income from operations jumped by 26% to $17.35 billion. The operating margin jumped to 43%, up from 40%. I've been talking about Meta Platforms for 5, 6, 7, 8 years now, even before I was on YouTube when I was writing articles for the Motley Fool. I've been talking about just how lucrative this business model is, the social media business model. And if you look at it more broadly, the user-created content business model is very lucrative because you're not paying for the content, the engagement on the platform, right? Meta Platforms doesn't pay you when you make a comment on your friend's post or when you post a picture of your family gathering or whatever your post might be or whatever your engagement on the platform might be. Meta is not paying you for that. You're volunteering that engagement, you're volunteering your time, and Meta is making money off of that. Each and every user, Meta gets to make money every time. The more time you spend on the platform, the more advertisements are shown, and the more money Meta Platform makes. Also impressive, the company's growth in family daily active people. What they mean by this is how many people use one of their apps on a daily basis. And that number jumped to $3.3 billion for September of 2024, which was an increase of 5% year over year. Now, you might look at 5% and say, well, that's not really that much of growth. But when you look at the number, that means it's 150 million users. That's roughly half of the size of X, formerly known as Twitter, the company added in 1 year. And so the company's growth in the number of people has been impressive because it's already at over 3 billion and it's still finding ways to grow, ways to add users. And the increase in users is allowing Meta to show more advertisements. In fact, ad impressions delivered increased by 7% year over year. And also the average price per ad increased 11% year over year. So they're showing more advertisements and each advertisement is generating more revenue. That's really strong. Meta Platforms adjusted well to privacy policy changes made by Apple around 2021, 2022 that made it more difficult for Meta to target advertising. Also, today's news from the Supreme Court that TikTok is going to be banned and might have to end operations in the US if they don't make a sale is going to be a positive catalyst for Meta Platforms. It has a rival service, it's short-form video content, and that has performed well. Over the last decade or more, I've been impressed by Meta Platforms management's ability to adjust to huge changes in consumer behavior. The first big change when consumers went from spending a lot of time on computers to spending a lot of time on phones. Meta Platforms adjusted to that really well. And then when consumers changed from spending more time reading posts to looking at images and commenting on images. Meta Platforms adjusted well with that with its Instagram app. And then more recently, when short form video content became more popular, Meta Platforms introduced its own short form video platform that's working really well. And then when it adjusted to privacy policy changes made by Apple, it adjusted well. So this goes to show that management is very capable. CEO Mark Zuckerberg has done an excellent job with this business, prudently managing the capital, making smart decisions. Although a big question mark remains on its huge investments on the metaverse. That's a big question mark still. But given the success that Meta Platforms has had in over the last decade with the current management team, I think you can give management rope here and say, okay, we'll give you the benefit of the doubt here. If you see this as a big opportunity, we can go along because you've identified big opportunities in the past and capitalized on that before. So you've earned the reputation, you've earned that credit from shareholders and investors. This is what I compare companies that have earned that. Companies like Meta Platforms, Netflix, Amazon. These companies have been extremely good at investing in products and services that generate revenue and profit. So when they find a new opportunity, I'm generally happy with that company to go ahead and spend the money on that new opportunity because they've shown me that they know how to identify opportunities and capitalize on opportunities. And so in the fourth quarter, the company is forecasting $46.5 billion in revenue. But one of the bigger things investors should look out for is the capital expenditure budget. And the company in 2024 said they will spend $39 billion. For 2025, they said they expect significant increase in capital expenditures. And again, this goes to highlight the point I made earlier about when a management team has earned that credit, when they've demonstrated they know how to invest capital, you can give them the benefit of the doubt. And if they are spending a lot of money or spending a lot more money, as an investor in the company, you should be happy with that because it's the money that they spend that turns into products and services that generates profit. So if they're spending $40 billion, you better believe that they expect to receive profits way in excess of what they're spending. And it's a matter of, do you think that they know what they're doing or do you think they're being wasteful? And I don't think they're being wasteful. I think this company has demonstrated in more than a decade of performance that they do not like to be wasteful, that when they spend money, they're doing so with the expectation of huge profits coming back in return. So the stock is now trading at a forward price to earnings of 21, which is on the higher end of its valuation going back a couple of years. This big drawdown, of course, was because of that scare from the privacy policy changes made by Apple. And then when Meta Platforms demonstrated that it can adjust to that challenge, the valuation has come back up. But I don't think it's expensive at this price. In fact, I still think it's cheap at this price. I have Meta Platform stock rated as a buy, and I updated that recommendation today. As to whether or not you should buy before or after earnings, I don't think this valuation is so cheap that you need to buy it before earnings for the fear of missing out on a big surge higher. I think this falls in line with my general recommendation is that if you're on the fence of whether or not you should buy before or after, just split up your purchase in two and buy half before earnings and half after earnings. That way you spread your risk on both sides. You lower your risk of missing out by buying half of before earnings, and you lower your risk of a big drop after earnings by waiting to buy half after earnings. That would be my recommendation for Meta stock.
Hey everyone, if you like watching my videos, then I've added a great complimentary product just for you. I've written a book that's available for sale now that highlights my 6-step investing framework. Even if you don't follow that investing framework, just reading it and knowing how I evaluate stocks will make it a lot more interesting and informative to watch my videos. I've added the link in the description below.